Hey guys, it's Christopher Mullen from the goldandoilguy.com. I want to just point out a couple new bull markets or stage one base patterns that are starting to form on the market that a lot of people really aren't paying much attention to, and usually that's what happens in a stage one is something's been in a bear market for a long time and then it becomes not so attractive anymore. Everybody forgets about it, and really the institutions and smart money are accumulating slowly, and nobody's paying attention, and eventually a base happens and prices break out and rally, and the general public don't catch on to these patterns until the breakout has happened and a huge move has already taken place. So I just want to recap on a couple real quick here. Now this is the GLD, the gold ETF. This is a daily chart, and we've got the 150-day moving average on the chart here. And more or less what we've seen is the gold market has been in a downtrend for a couple years. We're starting to see it actually turn up. We're starting to get a nice basing pattern here. We've got a bottoming pattern that's formed, and now we're starting to see it actually show some strong relative strength. It's been rising nicely, and we still have some work to do before the gold market fully breaks out. I think we need to break really this key pivot high over here, and we could see the market go up and chop around here for a while and consolidate before it breaks out, and we see the real bull market in gold take off. So this is starting to unfold. A lot of people have gotten in a little early and catching a nice play to the upside, and if it breaks out, they're going to have some pretty decent gains. Now overall, the big play doesn't really take place until we break this key double bottom formation level here. Once we break this level, that's when we're going to see explosive moves in gold and silver and gold mining stocks. Now another one I want to cover, just looking at silver, let's just pull silver up real quick. Silver's a similar pattern. Unfortunately, eSignal's been having some problems with their historical data server, and it's driving me nuts. It's not pulling up certain charts anymore. Let's take okay, here we go. Okay, here's the silver. So we can see silver's been putting in this nice bottoming formation, starting to flatten out. Not a lot of people have been paying attention to it. You don't hear about it on CNBC. You don't hear about gold and silver really anywhere for a while here, and we're starting to get some upward momentum. We've got the 150-day moving average sloping up. We've had a nice little pop here. You can see some strong relative strength recently in silver. It's been under pressure a little bit here, consolidating, but overall still showing some signs of life. Now, the real key here, GDX. If we look at the gold miners, they've been holding up with nice relative strength. They're starting to break out to the upside again. The major basing pattern for miners really has to come across and break this middle area. So there's still quite a ways to go in terms of rallying before this basing pattern has really broken to the upside and things get explosive. Until then, we could see things chop around and take some time, and eventually we're going to see those explode to the upside. But the gold miners, we've been seeing some really strong patterns on individual stocks, really strong volume patterns confirming that there is big money institutions moving into these gold mining stocks, and that's what usually moves first. You see gold mining stocks, they're the high leveraged precious metal plays. You see the big money move into those first before you usually see the physical metals move, which fuel the fire for the gold miners down the road. But everybody has to build their position in the stage one pattern here before that happens. Another chart to look at, looking at the bonds. If we just look at the TLT ETF, you can see here we're starting to get a bottoming pattern here also. 150-day moving average is flattening out. We've got a pretty clear resistance level across here. Again, this is the 20-plus year Treasury notes. Nice basing pattern. Really need to break this 110 mark, and then from there on we could see a pretty strong rally to the upside. Now, another ETF that follows the bonds for this possible new bull market starting in bonds. And remember, if bonds rally, that means the stock market has likely topped, and we are going to see stocks sell off fairly sharply. So bonds are usually a leading indicator. They lead a little bit, and if they start to break out, which they're very close to now, that means the equities market will soon roll over and sell off. Now, another ETF is the EDV. It holds mixed durations of bonds as opposed to just the long-term ones. You can see we've got a nice clear level around this 100 mark. Again, I really like this ETF. If we were to just zoom out a bit, you can see the nice big picture here for the upside. Right now we're trading at 98. 100 is about the breakout level, and there's potential for it to go all the way back up to the 120, possibly even the 135 mark. So there's some pretty good potential in bonds starting to form. The last time we saw a basing pattern in bonds here, we saw it over here. Nice basing pattern, more or less a cup and handle pattern. And we saw an explosive move to the upside as the equities market sold off. So that's exactly what we're going for here. Again, we could see an explosive move. Fear hits the market. Everybody piles into bonds and gold, and the equities market sells off. Another chart I want to pull up, and this is a sector nobody's really talking about, is the real estate or the REITs, ETFs, the funds. We're starting to get some nice basing patterns here. When people get fearful and the stock market becomes overvalued, people start looking for other investments like real estate. And if we just look at this, you can see here we've got bottoming pattern forming here. These are panic sell-off, capitulation selling. Those are usually a sign that the market is starting to roll over. Eventually you get a, depending how aggressive you want to be, you get these basing patterns. And once that momentum is reversed to the upside, you get these strong rallies going up. And again, same thing here. You get these panic sell-offs. Eventually you get a pop and you get a breakout, and the 150-day moving average is turning up again, and you get another big rally. And that's where we're at now. We've got more or less these down trend lines. They've been broken. The 150-day moving average is moving up. We're now testing this key resistance zone on the chart. If I just zoom in, you can see it a little bit better here. You can see here, this is an REM ETF. A lot of the REIT ETFs look identical to this. It's a matter of picking one that has the best looking chart pattern and some decent volume. But overall, this pattern looks as though it's at 12. Looks like it's got good potential to go up to the 15, possibly 16 area, which is a decent move for when the equities market crashes. And it's nice to be making some decent money as the market crashes in these safe havens. Anyways, just to quickly pull up a chart of, here's on my stock charts free list. You can see here I've got the Dow. I've kind of drawn mini topping pattern going on in the Dow here, and how you see the price of gold below it consolidating in a bullish formation, indicating that there's likely fear in the market of a market sell-off. And as people accumulate gold as the safe play, the equities market then breaks down and gold rallies. That's the same for the bond market. We had a consolidation in bonds, a basing fat pattern as the equities market was becoming choppy, and then we got a pop in the price of bonds, and of course the equities market sold off. Now that's exactly where we're forming today. This time both gold and both gold and bonds are forming a similar or larger pattern. Gold's got a much larger pattern this time, and the equities market is this much more overbought. So not really overbought, but is overextended and due for some type of 10 or 20% haircut in the market. So it looks as though we're starting to get there. Really, until we break this previous pivot low here in the Dow, the market hasn't really rolled over. It could continue to march its way higher. And again, like I pointed out with gold and bonds, we could see them chop sideways in this basing pattern for another month as the equities market may push up to new highs. Eventually, though, when we get a break of these pivot lows, we're going to see money move into bonds and gold, and it'll be a nice play to go forward. Anyways, hopefully this info kind of helps out. I'm trying to just share some random insight on how to spot market tops and bottoms and opportunities in the market. Talk to you later. Bye-bye.